Well, I think they're very careful about stock selection, I'll say that. I mean, I think it was interesting, Mike's list of stocks that have performed well and hit all-time highs today. I mean, it's interesting, yes, they're transaction processing powerhouses. They're all about digital commerce and digital trade on the one hand. On the other hand, they're quite defensive. And so they're like a great place to go, and they keep hitting new highs and new highs and new highs. I think that the consumer staples area, to me, reflects that the fear index is actually pretty high right now. We've gone from having a high greed factor to having a high fear index factor, over the last 3 or 4 months. I think it's a carryover from what happened in the fall. And then we have, on top of this, as you point out, the trade. So I think you have to be very selective. Again, I've always been a U.S. secular growth, U.S.-centric company guy, and I think that continues to be the place to invest. I see very few arguments for any place else. In fact, name another region of the world, and I have strong negative feelings, as I frequently do.
Well, let's talk about one very in focus region, China in particular. The trade war, of course, making China rethink its economic ties with the U.S. The South China Morning Post saying that while China is open to continue trade talks, the government advisors are now highlighting the risk of sourcing critical supplies from an increasingly hostile U.S. and are exploring ways for the country to cut its exposure to the U.S. I mean, the rhetoric has been upped in recent weeks and months. No question. And Josh, now is the question of you don't want demand exposure to China. It's not just about the supply chain. Is that fair?
So that seems a little too easy. Because I think a lot of that negative expectation is starting to get priced into a lot of the affected companies and a lot of the affected sectors. If you think about what could cause a market that's so despised, or what could cause a sector that's so despised, you actually don't have to come up with that reason in advance. The value investor would tell you, stick around, an asset cheap enough that's a good asset, we'll find a reason to rally. And we saw that Brazil impeached its president. The stock market in Brazil went up 75%. There's no reason, nothing to get positive about in the headlines, but that kind of thing happens all the time. So I think with companies that are affected by trade directly, yeah, it's tough right now, but if everyone expects that, it might be good enough. I also agree with your point. There are winners no matter what. And we talked about retailers earlier, for example. They're going to be under pressure and tariffs, and what is that going to do to the supply chain? Somebody go tell Lululemon that it's a retailer. Somebody go tell that freight train of a stock that it's in a beaten down sector. I don't think they care. Somebody go tell Foot Locker, hey, pal, you're a retailer.
Well, obviously, the strongest ones that are attracting the most traffic and sales are in better position.
This is my point.
But the problem is there are a lot of losers in retail right now.
But so you take a barbell approach. You say, okay, what's working right now? Companies that aren't economically sensitive, staples, utilities. If I need to be in the group that's working right this minute, fine, do that. But then look at the Investor Business Daily stocks for the other side of the barbell. Look at the companies making new highs, growing earnings, growing cash flow with insider buying in some cases. Like, you can do both, be defensive and try to be in defensive areas, and then have these outlier winners. I think we talked about software as a service company, another huge area where you can find 52-week highs almost every day. They don't care what's going on with China.
Well, I think